Okay, guys. Good morning. Good morning. Sorry for the delay. I was kind of trying to get a few things with my microphone fixed. Okay, so hope you guys had a lovely weekend. And yeah, I got a few emails requesting for a trading strategy. Yeah, especially from the newbies. I think I've got like six. Let me just check. Yeah, seven, yeah, seven emails requesting for trading strategies. So yeah, there's one that I had been working on on a slightly more advanced level, but I thought I would share this with you so you can so for those that are just getting into the forex market, they have this opportunity to learn as you earn. You can basically use this simple and highly profitable strategy to learn the trade, learn the craft as you earn. Okay, so yeah, without further ado, I just want us to get straight into this strategy. Okay, so we're going to be using two simple technical indicators. Okay, the MACD and the parabolic stop and reverse, or PSAR for short. Okay, so the settings for the MACD are going to be 8, 13, and 13, and then the settings for the parabolic stop and reverse will be 0.01, 0.1. Okay, so yeah, and then my recommended trading pairs for this strategy are going to be Australia US dollar and all cross yen pairs. Okay, the reason why, because they are trending, they hold trends for quite a while. Okay, um, take profit and stop loss 50 pips and 100 pips respectively. If you're using an automated version of this exact same strategy, you can just leave the take profit and stop loss open, because the system is designed to trades and exit, so it will open the trades and exit them for you totally hands free. You just plug in the robot and it will do all the work for you. Okay, so yeah, without further ado, let's go look at this. Let's go execute a few trades, and I just want to show you how this works so that you can yeah, so I'm going to use an open take profit and stop loss. Okay, so let's first get rid of this. Let's see, get rid of that, that, and that. Um, oh yeah, the ADX2, won't be needing that. So let's start with our first indicator, which should be the MACD. Okay, I don't have the MACD. There, we'll go with okay, let's do that. And then I'm going to apply a moving average to this, just to give you better visibility, just to show you how it will actually work. Um, let's see, 13. Close apply to previous indicators data, and okay, there we go, we're done with the MACD. The next indicator is going to be our parabolic stop and reverse. Okay, with settings, remember, of 0.01. Wait, it's going to be 0.01 and 0.1. Okay, so we're going to use a dark slate gray colors, and that is what your chart should be looking like. Okay, so we realize that whenever, let's take an example of this. Whenever the PSAR is above price, price is generally trending downwards. Okay, whenever PSAR is below price, price is basically moving upwards. Okay, so PSAR up means price going down, and PSAR down means price going up. Okay, however, because it's a, so we use this because it's a trend identification indicator. However, aside from, we're not going to buy when PSAR is just below every time, and we're not going to sell every time PSAR goes above price. We also want to find the overall trend direction. Okay, so if basically the overall direction is bearish, okay, then we're going to ignore all the buy possibilities that occur here. Okay, so that is step number one. Okay, step number one, identify the whole trend, the overall trend direction. Okay, so you don't get into choppy markets. Okay, now I'm not saying you will never get into choppy markets. You will always get into choppy markets, but if you can avoid them as much as possible, so much the better, so that you can only catch the highly profitable swings and moves. Okay, now MACD. Okay, same to MACD. When PSR is above price, price is moving down. Okay, the charts are moving down. Similar to the MACD, with your settings you realize that the MACD is trending below the zero level. Okay, and this is what we want. We want an alignment, a perfect alignment of our technical indicators. Okay, so we know when to enter and then when to exit. Okay, so when do you enter a trade? Okay, every time we know that a trend is broken, okay, we know that there's always going to be a retest of that, of the trend or the trend line. Or if you're using trend lines, in this case we're using a trend and momentum oscillator to determine the trend for us and to determine how fast it's moving and in which direction it is moving. Okay, so what we're going to do is we wait for the retest. Okay, MACD crosses below zero, we wait for it to retest around there, and then the next entry is where we enter our trade. Okay, this point of this cross is where we enter our trend, as long as, okay, as long as PSAR is still above price and the MACD is still trending below zero. Now there is a cross. Remember, MACD is trending below zero. There is a cross after the retest, okay, and PSAR is above price, okay, and the same applies to the bullish markets. Okay, yeah, we're not going to look back that far. Or I could just do this, take that out, take that out. We could look for a bullish example. Okay, where? Let's look for a nice example. Price retests, PSAR below price, MACD trending above, and then there is a cross there. Okay, that cross actually happened above zero. Okay, so remember that if you're doing this manually, you might not catch the cross in time. At times you might not exactly see the cross. Okay? But remember, a bot is going to see the cross as it happens. It's going to calculate it to the most minute detail. Okay, so there's lots of, so this is the general overall trading strategy for those that are going to be trading it manually. For those that will be using an automated version, then you really have no need to worry. The bot will do everything for you. Okay, so without further ado, let's go and look at how this gets executed. Okay, let's go. We have price above, and then price begins to move down below, followed by the MACD, and then there is a cross there, and then we immediately open a sell position. Okay, now when do we exit? We exit when there is another cross here. Okay, now you can exit when the two moving averages of the MACD cross, like here, or option 2, which I prefer, is you can close your position when the after a cross has happened and the parabolic stop and reverse has switched position to indicate a buy or a bull's market. Okay, so we have another sell position there, and oh, I could actually in the meantime be, let's see, let's just go to the profitability graph. um, it will be showing with time. So we have another sell position, and you look at how it's moving. We're selling and selling. We're just following the trade. Okay, we're not looking for 10 pips, we're not looking for 20 pips, those tiny trades. We're just letting it run. If we get 10 pips, well and good. If we get 20 pips, well and good. If we get 1,000 pips, yes, that's what the market has given us, we will go for it. Okay, so look at when we exit here. We exit when parabolic stop and reverse has changed direction, and there is also a change in direction in the MACD. Okay, now look, there was a cross here, but this cross happened below the zero line, and so much as this was a profitable buy, okay, we did not take it. Why? Because it did not meet our criterion. Okay, if it had crossed around here, then yes, maybe we would have bought. Okay, now because we lost this position here, we increase our lot size from 0.1 to 0.2. Unfortunately, we have also lost that too. Okay, so we increase our lot size to 0.3, and then we are taken out at break even. Luckily, we're taken out at break even. Okay, so let's look at what we have here, 0.1. Yes, because the last position was in profit. Okay, so this is basically, this is a martingale based strategy, but however you can also trade it without the martingale. Okay, you can trade it without martingale. And why isn't this graph coming up? Why isn't it showing? Come on, come on, come on, come on. Report journals. Okay, testing. Okay, let's go back to the graph. Yeah. Okay, so let's look at it. Yeah, we hit a profit here, we hit a profit there, we lost one position, hit another profit there. Okay, so let's look at this. We're looking at the 23rd of January, and remember we're trading from the 1st of January to today. Okay, today, I think today is the 2nd, 3rd of Feb. We'll look at that a little later. Let's just go check. Yeah, from the 1st of January up to the 2nd. I've lost so much track of time. I don't even know what date it is. Okay, so today is the 3rd. Okay, today is the 3rd of January. So let's go back and check whether our graph is on. Not yet. Okay, so look at this. Yeah, MACD is trending below 0, and then we had a beautiful cross here, gave us our entry, and as soon as parabolic switches position and MACD has also switched position. Okay, remember we're looking for an alignment. Okay, so if we're looking for an alignment for entry, then similarly we have to look for an alignment for exit. Okay, simple. So you let the trade run no matter how many times the MACD crosses itself. That's really not the issue. Okay, what we want to do is, what we want to identify is that we are still in a bearish market overall, and so times like this we're going to ignore these buys. Okay, and this is the beauty of an automated trading system. Once you have your strategy right, once you have your strategy on point, then you're not going to really hassle with looking for these entries, or when to enter and when not to enter. It's going to do all this automatically for you. Okay, so at the end of the test, there is our graph. Okay, so from the 1st of January up to yesterday. Okay, so today is that, so we don't have today's data, of course, but up to the 2nd, we executed about 12 trades. And let's go look at the report. Okay, report, we started with about $500. You can change that to anything, and our net profit is $305. Okay, let's see, where is this? Let's look at this. Lost trades. We lost only 5 positions and we won 7 positions. Okay, um largest profit was the $259. The largest loss was only $23. Okay, so profitable trades, average profit is about 55, yeah, stuff like that. Let's go look at the results. I mean, here we have the results. First trade 1, trade 2. So let's go look at this here. We have $24, $66, 23 minus 23 minus 22, 0, 13 minus 15 minus 2 minus 17, and then 259. And that's the advantage of letting the trade run for as long as it feels like. Okay, as long as the trend, as long as all conditions are still met, leave the trade to run. You know, it helps you minimize your risk. It helps you use tiny lots with tiny leverage, yet still gaining from the overall trend for as long as it's running. Even if it runs for 2-3 days, yep, you let it run. Okay, so yeah, hope you guys got that strategy. Hope to see you guys in the different forums. Oh, by the way, big ups to the guys from the FX Nights. Yo, the guys from MOBS, the guys from KYU, the guys from is it which other university is this? Guys, FX Nights, you guys are the bomb. Okay, Forex traders in Africa, you guys are lit. Yeah, I'm really impressed, and I'm happy with the rate at which the art and the craft are actually growing in Uganda. So I'll be sharing the links to these groups, and if you're interested, join them, ask questions. If you're new to Forex, yes, those are the groups to join, and a few others, but these are the top, these are the cream de la cream. Yeah, so you're new to Forex and you're looking for mentors, you're looking for friends, you're just looking for people to chat with. with yeah, those are the guys. Those are the guys. They mean business, they mean money. When it's time to make money, they are serious about their money. So join them. Yeah, I'll be sharing their groups in their links to their groups in the description. And yeah, click like, subscribe on you for the YouTube followers, for the Facebook followers. Please share this video and click the notification bell on YouTube down there, so you can get notified when I share more strategies, more tips and tricks. And yep, adios, happy peeps, and blessed week to you guys. Yep, see you when I can't avoid it next. Yep, adios.